prices. Well, let's now shift focus from diamonds to precious metals, and gold prices are trading off its all-time highs of $3,500 per ounce. This is after the U.S. President Donald Trump joining us has talked about tariffs there. Joining us now to talk about the outlook for gold is Harshal Barot. He's senior consultant, Metal Focus. Harshal, hi, thank you so much for joining in. And we've seen some profit taking and we seem to be holding around those levels right now. Would you say that it would need a more bigger trigger for the gold prices to go either ways from here?
Yeah, definitely. I think, Manisha, because some of the short-term triggers in the market, I think they've already been factored in terms of tariffs. I think the global markets are still in a waiting game because we are in a period where one day they're announced, the next day, they are recalled or paused. So I think until July, when a lot of these deadlines are due, I think we could see more of a sideways movement as far as the gold price is concerned. But given that there is still so much uncertainty around all these negotiations, there is still so much uncertainty about the US fiscal outlook. I don't think the rationale for holding gold has changed much. So, short-term profit taking aside, I think the overall picture still looks very, very positive.
Harshal, what is the sense from Metal Focus now, your in-house view on where the gold prices could be by the end of this year or the next?
So we still see gold prices making new highs. So we are looking at $3,800 to $4,000 levels for the gold price in the next 10 to 12 months going ahead. As I said, going ahead, even the US rate cut story will turn supportive for gold as we go ahead, and the true impact of tariffs on the US economy and the global economy will also become visible further down the line. So I think all these factors will continue to support the diversification argument as far as gold is concerned. So we are definitely bullish, at least from a one perspective.
For the Indian markets, Harshal, we usually see an import of around 700 to 800 tons. That has been a norm, plus minus some. What is the expectation for this year with the all-time high prices, slowdown concerns, weaker retail buying? Are you tinkering with that number?
No, definitely. I think we could definitely have a sort of negative impact on demand if the prices stay higher, which we expect. So as you rightly said, the average Indian imports, consumption, if I would say, is anywhere around. If I talk about jewelry consumption, it's around close to 600 tons. Investment demand is anywhere between 150 to 250 tons annually. So what we are seeing over the last year or so is that even the jewelry demand in India is falling because of the high price, but investment demand has been holding very strong. So we think a similar story is likely to play out this year as well. In absolute terms, definitely consumption could be down by anywhere between 5 to 10% compared to last year. But I think given the price, that will not be a very bad outcome.
Harshal, how would you look at the Indian buying this time around? Because we do understand that a major part, and this is something that we've spoken earlier as well, it's not so much to do with rural India now. The urban India seems to be buying more gold, would you say?
Yes, definitely. I think if you look at the price itself, gold is basically out of reach for a lot of Indian consumers at these price levels. And if you look at average rural incomes, definitely I think there is going to be pressure as far as rural consumption is concerned. And if you look at commentary also, from some of the jewelry companies, they also keep saying that it's the middle and upper middle class which is driving gold consumption at the moment. So I think that's definitely a factor to watch out for going ahead as well. But again, as I said, jewelry demand could definitely be impacted also because of the fact that we are seeing a lot of shifts towards lower carats in jewelry. So typically the 22 carat plain gold segment is shifting to 18 carat plain, and the 18 carat studded is shifting towards 14 carat studded. So we are definitely seeing that as well happening in the market.
Harshal, also, what is your sense with silver there? What is the kind of import that we can anticipate for this year now?
So silver demand, I think, last year for a couple of months, it was way above average because of the India-UAE SEPA, and some of the flows came in because of those reasons. This year, I think we see more of a normalization in silver demand playing out. Some of the factors that we see in gold in terms of pressure on weights of the jewelry and articles that are sold, that are visible in silver as well. We are increasingly seeing, silver articles and silverware being made in lower weights than they were typically because of the high price. So definitely that's going to be a pressure on volumes per se. But I think even the investment sentiment in silver, like with gold, is positive. So even though we may see silver jewelry and silverware demand suffer this year, I think silver investment will still remain resilient.
Harshal, while we talk about gold as in sense of imports, which happen between 700 to 800 tons, silver really has been volatile in sense of import numbers as well. 3,000 tons some year and 7,000 and then 8,000 plus as well. Is there any number that you guys have put out for this year as an estimate?
I think we would stick to the average that we have over the last few years, close to around 5,000 tons. 3,000 was an extreme low, and 10,000 was, I think, on the extreme side, very high. So we think we would be somewhere in the middle of those two numbers as well.
Harshal, when it comes to jewelry buying, and most of the jewelers tell us that the first quarter of this calendar year wasn't so great, and this quarter yet again has started slightly on a weaker note. You've talked about 5 to 10% of a discount in sense of volumes. This first half clearly would have a bigger hit. Second half, do you expect those numbers to start picking up?
Yes, I think our expectation is that we will see in the second half of this year. Typically, what we've seen, over the last 2 or 3 years is that we see this concentrated phases of demand emerging in the market. So second half of the year has a lot of festivals and, more concentration of weddings in India as well. So I think some of the deficit of the first half would be offset in the second half when we expect, consumers to return to buying. This quarter, again, as I said, it's a seasonally weak period. June, July, typically you don't see too much weddings happening in India as well. So, yeah.
So before we let you go, a final quick answer on silver, price estimates there?
Silver, if I talk from a slightly longer term perspective, next 2 to 3 years, we are definitely seeing, prices close to $40 being achieved easily. As I think it's being discussed very widely over the last couple of years that the market is in a deficit. So, as those deficits start playing out in the physical market, some of the inventories that are already there across the global market, once they start to come down and we see an actual physical deficit playing out, that's when the real price rally in silver will begin.
Fair point that. Harshal, thank you as always for joining in. So gold and silver prices both quite bullish on the higher side. The demand may suffer in sense of volume, but not in sense of value. And that is a positive one going forward for the markets. Well, on that note, it's time for a short break, but don't go anywhere. We have a special guest from AP Moller Maersk joining us on the other side of this short break.